available after this presentation will be made available afterwards if you want to come back and take a look at the slides, or you can get the recording as we move forward. So let's talk about what I do. I work for a credit union. Credit union is like a bank, only better. We're a not-for-profit financial institution. And being a not-for-profit financial institution, we're a place to borrow and save. So today we're going to talk about borrowing or lending. So why do we lend? Well, we lend to make money. What do we expect? We expect to get paid back. How do we know you're going to pay us back? That's why we do a lot of things. We have a lot of tools, and we will go into some of those next. So lending for us is credit for you. So we look at someone and our ability to lend to them. We answer 3 questions. Number 1, do you have the capacity to pay us back? Number 2, if you don't pay us back, what effect of your collateral will have on the loan? And then number 3 is your character, right? You may have the capacity and you may have the collateral, but if you're not inclined to pay us back, we are still out those loan dollars. So capacity is just simply what we call the debt to income ratio, all of your debts versus your income. We have common ratios that we use depending upon what loan that we're doing as a measure of your ability or capacity to repay us. Collateral, if it's an unsecured loan, there's no collateral, but if it's a home or a car, we have generally LTVs, loan to values that we go by, so we can properly assess if we have to repossess the collateral, what are we expecting to get from that collateral in the way of making us whole? And then finally, character, will you choose to repay us? And 2 things that we do, when we go off of FICO history, and number 2, we also go with repayment history for us. So if you have loans with a credit union, generally the credit union will be more favorable and lend to you because sometimes people choose to pay their credit union when they don't pay other vendors or other lenders. But principally, the market goes out there and goes off of FICO score for character. So what is our goal? Our goal is to make loans because that's how we make money. And we got to figure out how we're going to get paid back. And we want to do this as efficiently as possible. Hopefully we can, we rely on a few shortcuts, but that's what we're looking for. Sometimes we can use automation. We have artificial intelligence, or people, fintechs, financial technology companies in the financial space that use algorithms and such to try to determine, what's the best way for them or us to get paid back. So the first thing is DTI. Do you have the capacity to pay us back? Generally, we take all of your income, and then we have all of your current debts along with the proposed payment, and it's just a simple ratio. So if, for instance, you make $3,500 and your rent or your mortgage and your credit card payments, and the new loan brings your payment level up to $1,700. That's a DTI of 49%. 49 is a little high, but it's reasonable for good credit for a car loan. If you're talking a mortgage loan, a conventional home loan, actually 49% is a little too high. So you're not going to get that preferential treatment for a conventional mortgage if you were at 49%. Collateral, once again, LTV. You want to purchase a car, it's $20,000. If you have $1,000 down, that means you're borrowing $19,000. 19 divided by the 20 is 95%. For homes, conventional financing obviously is an 80% LTV requirement. It means you have to have 20% down. There are first-time home buyers and special programs that will take that 80% LTV and increase it to 95, 97. But if it's a conventional loan, one that Fannie Mae and Freddie Mac use, it's an 80% LTV. As far as car loans, yes, we do go above the 100% loan to value for car loans. For instance, if you have add-ons for mechanical breakdown insurance, gap insurance, if you have a negative equity in your current car, lenders do indeed go more than the value of the car, but seldom as in never on a house. But that's what in LTV, that's what we're looking at. What's your loan amount? What's the value of the thing that we're loaning the money against? Finally, the borrower's character. It's FICO. It's a kind of we've reduced all of your credit interactions to a number. And when I say we, I don't mean me, I mean the Fair Isaacs Corporation. There are versions of FICO that are out there. I think we're up to version 9. We currently operate off of, I think, version 4. So, and then not only are there versions of FICO, there are types of FICO. There's an auto FICO that measures your intent on repaying auto loans. You may blow off, say, medical debt or credit card debt, but you always pay your auto. That auto FICO will be different than your regular FICO. But there are many different flavors of FICO, but we generally talk about FICO as being a score and one score. So if you're talking about FICO, where do we get FICO? Well, we have 3 credit reporting entities. We have Equifax, we have Experian, and we have TransUnion. FICO is actually a credit scoring model that comes from Fair Isaac Corporations. That's the FI, Fair Isaacs, and then Co for corporation. So those are the elements, or excuse me, the FICO is determined based upon the Equifax, Experian, and TransUnion history. As a credit reporting entity, we report to Experian every month. People who borrow and their payment history with us. Some institutions report to one of these credit reporting bureaus. Other people report to 2, and the large Bank of Americas and the Wells Fargo's probably report to all 3 of these credit reporting entities.
Do they ever report to each other?
Do they ever report to each other? Yes, they do. They report to each other on consumer items. For instance, when I was a victim of identity theft, hello me, I wrote to all 3. And once one of the 3 credit bureaus accepts your identity theft documentation, they notify the other 2. And if it's accepted by one, it's in essence accepted by all 3. You'll see that later on. I'll point that out when we go through my credit stuff.
Thanks.
So 3 credit bureaus, but FICO is a credit scoring model by Fair Isaacs. Let's take a look at FICO. So it's a scoring model. You have a score between 300 and 850. Higher the score is better. If you don't have a score, it comes through sometimes as a 9005. If you don't have a credit score, and there are a couple other different credit score, no credit score delineations, but 9005 is the most common one. But generally, people have credit. They've had credit in the past, and generally, it's going to end up between 300 and 850. Since people report at different times during the course of a month, it could go up a little bit, down a little bit. Unless you have a credit event like a delinquency or default, it generally won't swing that much. So what are the factors that make up FICO? There are generally 5 areas. Your payment history is at 35% of your score. The amounts that are owed are 30%. The length of your credit history is 15. Types of credit is 10. And if you're applying for new credit, that makes up the final 10% of your credit score. These are just estimates, by the way. Technically, FICO hasn't revealed its model, but so many people have analyzed so much input and done so much research on, okay, here's their credit profile, there's their FICO score, that these estimated percentages are fairly accurate. So if you want to monitor your credit score, annualcreditreport.com is the government mandated free credit reporting bureau. That's the need to go out to annualcreditreport.com has lessened because other people have stepped into the market. Credit Karma stepped into the market, and even Experian itself has stepped into the market. If I was giving this presentation a decade ago, I would tell you to go to annualcreditreport.com. Anything that had free in the name, they want to charge you for. But nowadays, I actually go directly to Experian, and I'll show you what you can look for and what you can do yourself if you want to. So here is the Experian website. They constantly try and get you to buy stuff. I always do the no keep my membership. I never put in any credit card information because if I click on something wrong, I don't want the charge to automatically come through. So I went to Experian, I signed up, I got an account, username and ID and such, and always say no to the add-ons because you don't need them. So this is all free on Experian. My score is 836, which is very good. This is a summary page. We're going to explore the credit button on this summary page just to kind of give you a flavor of what you can get to for free. So under this button, there's credit summary, credit reports, and FICO scores. All these tools over here, well, if it's a tool, then they want to charge you for it. So I ignore everything on the right and just focus on those three things on the left: the summary button, the reports button, and the scores. So if you look at the credit summary, this is a screenshot of it. It just kind of gives you where you're at. Obviously the range 300 to 850 again, what the payment history is, and then average age. And then my oldest account is 23 years and 10 months presently. Interestingly enough, this report is as of February 6th. And you could have several, there are many different dates in here. This website's pretty much changing all the time. I did this presentation, I don't know, 3 years ago, and I went back in and looked at what the current screens were. And I'm like, okay, I gotta switch everything out because all the old screens looked a little dated. So this is from 2 weeks ago. So talking about what is on your credit report, here is what was on my credit report. Here's my fraud alert. Interesting, I sent letters off to 3 of the credit bureaus. Experian declined my initial claim because my police report was not physically signed, it was electronically issued. The other 2 accepted it, which then backfed into Experian. So they do talk to each other about credit disputes and things like identity theft, but they don't generally, if in other words, we report to Experian, Experian isn't going to send our loan reporting data over to TransUnion or Equifax. They're principally more on the East Coast. So it was a long time ago. It's going to roll off here pretty soon. It's getting close. Here are, once again, they go through all of the different scoring elements, and they let you know how you do. And they obviously, if it's an offer, they're going to want to charge you for it, but you can see the details. So like I say, if you want to go do a deep dive into your own credit and your own FICO score, I would recommend that you do it because FICOs are driving a lot of different things. Your FICO score will sometimes drive people's rental decisions. And definitely the pricing of credit is based on your FICO score. So let's see. So here's my score over time. Here is what you can additionally buy. You can buy additional FICOs from all 3. I don't know why you would. 1, I think, is sufficient. And then obviously all these tools are a cost that they're trying to sell you. If you know your FICO, you're like, well, is it a good FICO? Is it a bad FICO? So here is someone's opinion about what is a good or bad FICO with the FICO ranges. 800 is exceptional. Between 740 and 799 is very good. I would say anything above a 720 is very good. Some people make a cutoff at 700 flat. But if you want the best rate at a lot of different people's, when they loan you money, if you want the best rate, it will definitely be in that 720 and above score. So if you're down in the 500s, you have some work to do.
I have a question here.
Sure, absolutely.
And you may be about to address it, but how do you increase your credit score? Okay.
So if we go back to the items that make up your credit score, the most that you will do is your payment history. So if you have delinquencies, it will drive your score down. If you pay perfectly on everything, your score will go up. The amount of debt that you have in relationship to, for instance, credit limits. So if you have over 30% of your credit limit used up, so in other words, if you have $1,000 credit card and your balance is 750, that's going to ding your credit score because you're using up too much of your available credit, if that makes any sense. And those are aggregated. So they aggregate your entire credit card portfolio. So if you have, $1,000 on one card, but you have other cards that have credit limits, it's your entire credit limit versus the balance you have, collectively speaking. It's not just on the one card. But yeah, so if you open up a new card with another credit limit and you don't use that credit limit, that will help your credit score because it will reduce that ratio. So all these are very much ratio driven. Length of credit history, if you only have a file that's 2 years old, then you'll get dinged and you'll come off that 850 mark. If
Hi,
you
sir.
have a long credit
One
history.
of my question.
Yes.
Actually, sir, if someone just said that if my credit card balance is like maximum $2,000, so I use rest of all money. All money is $2,000 per month, and I'm using every month is $2,000. Is good for good credit, or it's like I am using like $500 or $300? That's good.
Right. The balance that it's the balance that gets reported is what they use to determine this amount of debt score. So in other words, if your credit card balance is $2,000 and you use it up to that limit each and every month, but you pay it off 100% each and every month, you're going to get dinged because when they report it, you were at your limit. So if you only want one card, you may want to trigger a reminder for you to pay off that card before your statement cycles. So if you pay off your card each and every month, you may want to go in and pay off the card before the monthly cycles so that they're reporting an amount that is a fraction of your limit. But it's a very simple, what is your balance at the time they report? What are your complete limits? And then they compare the two. If it's over 30%, then you're going to get dinged. The higher it is, closer to 100%, the more you're going to get dinged. In fact, you can go over 100%, but that's rare. So you want to try and keep it down below 30%, hopefully in the 20% level. And you may have to go get a second or third credit card that you don't use just to establish a higher limit so that if you get 2 more $5,000 credit limits, your total credit score is 12,000, and you just use your $2,000 card and pay it off every month, then your credit score will be good because your $2,000 is, 12% of that credit limit, which is a good use of credit. Or you can go in, keep your $2,000 credit, you pay it down to 200 each and every month before it cycles, and then therefore it'll cycle through at 200. But credit reporting is at a point in time, and it's, to me, they just take a look at it at a point in time, and then they make a determination as to what your credit score is at that time. And it's when the institution reports it. I hope that answered your question. Any other questions, Molly?
I'm not seeing anything else at this point, but thank
Okay.
you. Really helpful information.
Yeah, and we'll have a good 15 minutes at the end of the presentation for your questions as well. Just definitely want to make this valuable and answer whatever questions you have with whatever it's ever in the old hat rack here. Uses of your FICO score. So they use it to approve the loan. They use it to price the loan. There's also some people who use your FICO to determine what your insurance rates are. And like I said before, rental decisions. The standard is your rent should be no more than 30% of your gross income, but they are beginning to also look at FICO. these are my tips to build your credit. So this kind of applies to the question. If you don't have any credit report or no credit history, you don't have a FICO score. Dave Ramsey is famous for his pay off all of your debt. After 7 years, you have no credit history, and now you have no FICO, which isn't a bad thing, but modern society is expecting you to have a credit history. So tips to build your credit report. Okay, so pay your bills on time. Limit the amount advanced on your credit cards, 3% of the balance. Keeping old accounts open. Sometimes you want to close an old account, but you may not, it may not be in your best interest because age of credit is one of the factors. They also look at your different types of credit. So if all you have on your credit report are credit card loans, then it won't be as high as someone who's had a blend of loans, who's had a car loan, who's had a term loan, who's had a mortgage loan and such. And if you go through and you go to 5 dealerships in a day and you let them run your credit for purchasing purposes, just that the fact that you've had your 5 inquiries in a day car shopping will pull your credit score down. So, you know, be careful of who runs your credit. Only run credit when you're ready to make that purchase. If you could use a variety of different credits, do so. Sometimes I've gotten in the past a term loan that I paid off quickly just because I want a different type of credit on in my credit history. Keep those old accounts around. No more than 30% of your credit card limits, and then once again, pay it on time because that is the most sensitive to the credit score. So I say build your credit history early. My son, who was in high school, he got his first job. We got him a $500 shared secured credit card. He's never been late. He uses online banking, and now he's actually in graduate school, and his credit score is above 700. So you can do it. It doesn't really take a long time to get a pretty good credit score as long as you haven't screwed it up. So if you have got to repair your credit, that's a different project. But if you don't have credit, anybody will give you a secured credit card so you can start that process. The sooner you start it, the quicker you will build that history to get your score up. So it's kind of funny. When my son was, one of the things he wanted to buy was a computer when he was doing, when he was making money out of high school. And so he had to, because it's only a $500 credit card, he had to like buy everything in components. So he had to buy the motherboard, pay it off, then bought other components. But it's just a way to use the credit and build that score. Other little tidbits on the FICO and the mortgage loans. Generally, you're looking at having at least a 640 to be a conventional borrower. If you're under 640, it gets to be a lot harder. Also, your debt to income ratio should be under 43%. If it's over 45, then you're not a gold standard or conventional mortgage borrower. You'll have to go through special programs if at all. So on student loans are a specialized industry. We do student lending through 2 partners. One is for student loan refinance. The other partner is Sallie Mae. The thing about a student loan is that it's generally not able to be discharged in bankruptcy. If you wonder why student loan is so much easier to get than other unsecured loans, that is the principal reason. So if you get a whole bunch of unsecured loans from a variety of different vendors, you go bankruptcy, all those loans get wiped away, they're uncollateralized. If you do a student loan, that student loan survives bankruptcy and you still owe the money for a very long time. So that's one of the reasons why people like to do student lending, is because it survives bankruptcy, but as the borrower, you should know. Student loan forgiveness. The point here I'm trying to make is it does not apply to private student loans. So if you get yours directly from the government, those are the student loans that we are talking about being forgiven. If you've refinanced it with private student loan money, those are not eligible for student loan forgiveness. You can get a much, much better rate when you do so. And if your goal is to pay it off, then by all means, go down that path to minimize your interest expense. But if you're trying to get that student loan forgiveness, if you've already done the refinance, then most likely than not, it won't be a part of that package. It would be forgiven. However, if the funds came from the federal government, then yes, that's still in a student loan forgiveness space. So I've come to the end. Does anybody have any questions, comments, any unmuting to take place so you can ask me directly?
I have a question. What
Sure.
happens to our student loans? Like, I know I don't want to say this, but if if I were to like pass away, what happens to student loans?
Got it. The debt dies with the debtor. So if you have student loans, theoretically, your estate would stand in for you if you pass away. And if there was money in your estate, then the lenders could attach your estate or ask for your estate to make them whole. If your estate is minimal and you pass away, then those debts are yours and yours alone. So nobody other than you, and by proxy your estate, has to make good on those debts.
Okay, and there's no like difference from like a private and a like federal?
No. That's all loans. Car loans,
Okay.
mortgages, everything that you have. If it's secured, then your lender will try and collect the collateral. But if it's unsecured, then it rolls up to your estate. If you have no estate, if you have a small estate that doesn't require probate, the likelihood of unsecured creditors collecting on their loans is low, and they just write it off as a cost of doing business.
Okay, thank you.
Royce, I can see that you have a question. Do you want to go ahead and ask it? Royce, I see that you actually have a couple of questions. Do you want to go ahead and ask them?
Yeah. Hello, sir. I hope you are doing well. Actually, I want to know, as an international student, uh, can you get the loan as a international student or not? If you can, then which bank can provide?
You know what? It was a little bit hard to hear you. I think the connection was a little rough. Here's what I might do. I might just, I see that there was a question here that you posted, Royce. So I'll just read what you have in the chat. It says, for international students, can international students get loans?
I have no idea. I would say the financial aid office at CUSB would be a place to do that. Generally, financial institutions on occasion make loans to people who don't have a green card, are not employed here, but generally those loans are secured loans. So if you come over and you're like, hey, you want to buy a house or a piece of property, 50% LTV, sure. Where's the risk? We have the collateral for that. But for unsecured, I don't know of anybody who would make an unsecured loan to somebody who cannot remain in the country indefinitely.
Thank you. So there's another question here. By any chance, do you know of any internship opportunities that you might have at your credit union?
We don't really do internships here at the credit union. Yeah, we just don't do that. There are some security concerns, but it's just not a program that we've devoted time to.
And Daniel, I can see that you have a question. Do you want to go ahead and ask it? Daniel? do you want to ask your question?
I thought I muted myself. Hi, thank you for having us today, sir. I wanted to ask if you could remind us of the initial 3 C's at the beginning of the presentation, and then also if the modifications for a student loan, is that based off of debt to income ratio, or is that based off of your FICO? Because I've been working with some underprivileged students locally to seek out resources, and some of them are trying to modify, and I'm looking at like the minimum requirements here, and it's 43 to 45 for a loan with the minimum FICO score of 620 or 40. I was under the impression that they had to be around 33%. Do you know if that is correct, or is it on a case-by-case basis?
So answer the first question first. The 3 C's are collateral, capacity, and character.
Thank you.
So those are 3 C's. The loan modifications, okay, it feels like you're talking about, for instance, a student loan refinance.
Yes.
So that would be a third party coming and doing a refinance. The refinance would be based off of a FICO score,
Which most of them don't have. Okay, thank you. Thank you.
Now, there are loan programs where you can go in. No, for instance, the federal student loan program has this is how much I make. And so therefore they only take so much of that if you're a person who hasn't gotten to where they need to be with their career. So there are loan modifications based upon debt to income, meaning they're only going to take 5–10% of your income. If your income is low, that's where they're going to set that payment. So that's a federal program modification. But I think you're talking about modifying the interest rate or lowering the interest rate, which is now private student lending, which is a combination of, in essence, your debt to income ratio with your FICO score. Okay. Excellent. So,
Thank you so much. Excellent, excellent information. Does anyone else have any other questions at this time? Okay. And just checking to see, Ernie, are you still here? Do you
Of
have
course,
anything?
I'm still here, for crying out loud. I'm trying to behave myself.
he's been taking
Everyone.
notes all along.
Oh my God,
Ernie
I'm
Silvers,
dying over here.
MBA director.
Wesley, help us, a basic question, difference between a bank and a credit union. You work at a credit union. Help us understand the difference there. Just a basic question.
Sure. So credit unions are not-for-profit financial cooperatives. We have members. Banks have customers. We have members because the members vote for the board of directors. So we are run as a not-for-profit financial cooperative for the benefit or for financial services. One of the things that we say is not-for-profit, not for charity, but for service. So we're not a 503c charity like a church or the Red Cross. We're a 5014, I believe, which is a nonprofit that is used to render services to the members, like a country club could be a nonprofit, or other service-related mutual. They have a mutual insurance where the owners of the policies have a stake in the company. So as a member, you vote for a volunteer board of directors. And because we are for service, we don't have shareholders to pay. And so we do things that are more member friendly. So we don't charge quite as much on loans. We pay maybe a little more on your deposits, CDs and money markets, and charge you less on fees, because the only reason why we're around is to provide service to the member. So banks obviously are run by a board, but it's a board that is generally compensated and made up of stockholders, and banks generally produce dividends, and that takes part of the income out of the institution that can't be used to subsidize fees or interest rates. So credit unions have a common bond. So that's why, generally they were initially, well, they were back in Germany to try and fight against some of those money changers. But there's a reason why you have one, whether it's, for instance, Glendale Unified Teachers formed our credit union, and therefore we are very teacher related. We've expanded out since then, but our core membership is teachers, and we do a lot of things specifically for those teachers. So we have special accounts for them, we have special loans for them, because that's who we were created to serve. And that's the main difference. There is a business of running a financial institution, and that business should be done well, because we want to, serve the membership today and in the future. So we want to be responsible with our spending and such, because, our attitude here is it's the members' money. So we want to provide a comfortable environment for people to come in and do their banking, but we don't want to needlessly spend money on things, because it's at the end of the day, it's the members' money. So yeah, I've been in the industry for over 25 years now, worked for a variety of different institutions. One of the good things about, let me just pitch the industry. So a lot of people, if you get into the credit union industry, we all share because we have different fields of membership, so we're not in direct competition. So because we share, everybody kind of knows everybody in the industry, and we share policies, we share advice. Hey, what are you seeing? If someone's seeing a particular fraud in a certain area, they'll alert other credit unions in the area about that fraud. But more importantly, for today's students and tomorrow's workers, you can go from credit union to credit union. So if I'm looking for an employee in my accounting department, I look for another credit union who wants to move up into my accounting department, because I know they know the culture. I know that they have a basic source of knowledge. And so a lot of people will work for 2 or 3 credit unions over the course of their career, because the industry is a fairly tight-knit industry. So like I say, because it's focused on service and not profit, I think it's it's like I say, I looked at the banking industry, I looked at the credit unions, I chose the credit unions because I thought it was a kinder, gentler industry, and I haven't been.
But as far as services and so forth, checking, savings, loans, all
We have
very
everything that
similar.
the banks have, and we just deliver it with a smile and not a scowl. So thanks for your question, Ernie.
Awesome.
I just learned something new. I've had a membership at a credit union, and we have a credit union, of course, affiliated with Cal State San Bernardino. And I now understand why they are so amazing. Their customer service is just out of this world, and so many benefits. And I'm like, oh, okay, I understand why now. That's great. Thank you.
Yeah, I like to say, been very, very happy with my career choice. Obviously, went to Cal State San Bernardino back in the day. I'm sure it's changed a lot since I've been there. But yeah, no, went back to get my MBA. Happy I did that. It's, because I think there's a lot of value in the MBA. I started mine, before the pandemic. So I like to say that I was remote before all the cool kids went remote. But they definitely had the program that allowed me to do it as a working professional. I was lucky enough to have my employer pick up the bulk of that cost. I do know that there are other ways in which to get, your education paid for. But I think that, credit unions often have educational reimbursements. I know we have one for staff of $2,500, and I know a lot of other credit unions have other things. I mean, it won't pay for Pepperdine, but it does go quite a bit when people are working their way through a community college program or other state-sponsored universities and such.
If I may ask, how did the MBA impact your career?
It was something that I wanted to do for quite some time. The youngest was in college, and I had no further excuses. So I went into kind of where I wanted to be. And like I say, the remote program that the MBA at CSUSB had really fit with the current lifestyle. There are areas of study, supply chain management, that frankly just did not exist back in '88. There was no course on supply chain management. It's 30 years old, right? So at least the educational institutions, although they are, if you're in school, it feels like they're slow and they go on forever. but over, there is a drift over time, what's important to being a good businessman. So, say a lot of those I refreshed a lot of my business knowledge. And like I say, the supply chain management, like I say, it wasn't even around when I first went. Very interested in that. Some of the marketing stuff, cross-cultural marketing and such. They're relatively new. But yeah, so it's made me think about different things here and what we can do and what we can accomplish. And I'm always pulling from that experience to get insight into today's business problems.
Nice. Very good.
Excellent. Thank you for sharing. I am actually in the program myself, as well as working for the program, which is interesting to have both perspectives. But I mean, within the first few weeks of starting the program, I was implementing what I was learning on the job. So yeah, I agree with you. It was also a personal satisfaction thing for me. I had been wanting to go back to school for a long time. And so yeah, thank you for sharing. I resonate with what you shared for sure.
Yeah, it's never too late to go back. Although my educational window might be sunsetting, I do feel that definitely there's more conquests out there. Who knows if, I may think about a doctoral program, just because, like I say, I think learning is important. Lifelong learning adds a lot, I believe, to quality of life. And the writing gets better over time, by the way. So the more you flex that muscle, the more of that muscle that you have. So
Okay, well, does anyone have any other questions? Okay, thank you so much, Mr. Walton. I really appreciate your time today. Such valuable information. And we have definitely recorded this session. We're going to put it on our YouTube channel. So it'll be the CSUSB MBA YouTube channel. We should have it up by the end of the week. And any last thoughts that you want to share, Mr. Walton, before we end the presentation today?
Yeah, like you say, you can increase your credit score without buying into a product. Making your payments is the most important thing, but your FICO score is definitely used, and people are thinking of new uses for it. The more that everything moves forward. Yeah, no, like I say, I appreciate everyone's time. If you have any questions, feel free to reach out. I don't know if I forgot to put my contact information in there, but I'm sure Molly would love to hear from you, and we'll get us connected. I'd be happy to address people's individual situations offline, if you're more comfortable doing that. But thank you all for your time and attention. Appreciate you being here.
Thank you so much. Very kind offer. Of course, y'all know how to reach out to me, or at least I hope you do. If not, I'm putting my email address in this chat, so no excuses. All right. So thank you all. Of course, thank you to Mr. Walton for your time and for all the valuable information you imparted today. Thank you, Ernie, for your excellent questions, for being here. Thank everyone for your questions, and we will go ahead and close out the program today. And I hope you all have a great weekend.
Awesome.
Thank you.
Thank you. Have a great week.